for tuning into this edition of Business Daily. Coming to you live from Seoul, I'm Lee Ji-yoon. Before we get started, let's first take a look at today's highlights. A new report warns that Korea's exports will take a hit if the country doesn't join the mega Trans-Pacific Partnership trade deal. Korea's debt levels continue to rise, threatening the health of the overall economy. But the Bank of Korea warns against stronger and hasty measures on slashing debt. We'll sit down with an expert to talk about this. The Bank of Korea has said it will stay on track with its loose monetary policy throughout next year. Now, this announcement was made at a policy management meeting for 2016. The central bank said this is as the country is expected to face uncertainties on its path of growth, despite forecasts for a continued steady recovery in the economy. It added inflation is expected to rise, but upward pressure will not be too significant. On top of that, it cited the country's swelling household debt, poor performance on the corporate front, as well as the outflow of foreign investment as potential risk factors. And starting from 2017, the central bank will reduce the number of rate decision meetings to 8 from 12 a year so that it has more time to evaluate the mid to long-term impact of its monetary policy decisions. Consumer sentiment in Korea has dipped for the first time in 6 months. The Bank of Korea says its composite consumer sentiment index came to 103 in December, down 3 points from the previous month. Despite the drop, a reading above 100 indicates that optimists outnumber pessimists. The figure had been on an upward trend after a dramatic dip in June when the MERS outbreak was at its peak in the country. The central bank says this month's drop comes on the back of concerns about what impact a U.S. rate hike will have on the Korean economy, as the survey was carried out just before the Fed's announcement. Because of that, analysts say it's too early to tell whether consumer sentiment will keep souring or whether it's just a blip. Meanwhile, the two Koreas have agreed on how much rent South Korean companies operating in the inter-Korean Kaesong industrial complex will be paying North Korea for using their land. And for more, our Connie Kim joins us on the phone. So Connie, tell us more about the agreement.
Ji-yoon, after more than a year of negotiations, the two Koreas have agreed that South Korean companies will pay 64 cents per square meter per year for the land they use at the complex. So to be exact, only about a quarter of the land in the industrial park will be subject to rental fees. The South Korean companies were exempt from paying rent until this year, after the two sides agreed the South could use the land rent-free for a decade in 2004. The agreement says the rental fee is due once a year by December 20th, though this first payment is due by February 20th, 2016. Rental fee revisions can be made every 4 years, but the new fee cannot be more than 20% higher than the previous one. North Korea had initially demanded South Korean firms pay $1 per square meter for all of the land that was to be developed under the 2004 agreement, but Seoul insisted on paying half of that, or 50 cents for the land they're actually operating on. Seoul's Unification Ministry sees the agreement as meaningful in that the two sides cooperated to work it out. We don't yet have a response from the South Korean companies, and we'll have to see how they perceive the new change. This has been Connie Kim from the Unification Ministry.
A new report shows that Korea's exports in the parts and materials sectors will take a serious hit if the country fails to join the multinational Trans-Pacific Partnership deal. Why? Because of Korea's growing dependence on the global value chain in these industries. Our Kim Min-ji has more.
Over $13 billion US. That's how much Korea will face in losses in its parts and materials sector in the 10 years after the Trans-Pacific Partnership takes effect, should it fail to join. According to the Korea Economic Research Institute, Korea's growing dependence on the global value chain in such industries will result in an over $11 billion decline in its value-added trade with the US and almost $2 billion with Japan. The figure is equivalent to nearly 20% of the export volume of the materials and parts industry within the TPP region. Analysts say if Korea fails to join, it will not be able to take advantage of the massive global network formed in the Asia-Pacific region, which will have a direct and indirect impact on the country's exports in the sector. Although Korea has separate free trade deals with 10 of the 12 TPP member countries, the group has agreed to seek a common set of rules of origin to determine whether a product originates in the TPP region, so Korea will lose its competitiveness. The think tank says the government should step up its efforts to quickly join the TPP in order for local companies to boost their business and competitiveness, as well as increase their investment and exports. Kim Min-ji, Business Daily.
There's evidence that the emissions rigging device that was found in Volkswagen diesel vehicles also affects fuel efficiency. Now, that's according to Korea's Transport Ministry, which has been investigating data that was handed over by the Environment Ministry, whose tests last month confirmed the existence of emissions rigging in Volkswagen cars sold right here in the country. An official said on Thursday a correlation has been found between the device and the car's fuel efficiency, and that they will start their own testing to confirm the discovery in the new year. After last month's investigation results, the Korean government ordered a recall on 125,000 cars and fined the German auto giant $12 million. It's getting more and more difficult for households to pay back debt, as confirmed in a recent report by Korea's central bank. And figures show that families are accumulating debt at a much faster rate than their incomes can handle. Our Lee Ju-young has more.
The ratio of Korea's household debt to disposable income climbed to a record high as of end of September, standing at 143%, according to a report released by the Bank of Korea on Tuesday. This is 5 percentage points higher than 6 months ago, indicating debt is growing at a faster pace than income. While disposable income only grew by 4.3% as of end September, household debt, on the other hand, surged around 10% compared to the same time last year. It now surpasses the $1 trillion mark, with mortgage loans accounting for a hefty sum of the total debt burden. The Bank of Korea says it expects to see the debt ratio drop next year, with commercial banks set to tighten credit standards for home loans. The guideline calls for a closer assessment of the borrower's ability to pay back the principal as opposed to just the interest, and drastically reduce the grace period in repayment schedules. The stricter screening process comes on the heels of concerns that the high level of household debt could turn disastrous for the economy, especially as the country faces the possibility of an eventual interest rate hike in line with the U.S. Federal Reserve. But market watchers say mortgages will likely continue to swell by at least $2.5 billion per month until 2017, as the supply of newly built apartments will still give homeowners access to collective loans that come with allotments, debt applications which are excluded from the tighter screening process. Lee Ju-young, Business Daily.
And as just noted, the fiscal soundness of households has worsened, and businesses are no exception. Take a look.
The Bank of Korea's report card on the country's overall financial system said conditions have remained stable, thanks to the fiscal soundness of financial institutions and strength on the foreign exchange front. But the central bank did say that there are increased risks within the system compared to 6 months ago. At the center of this is the country's growing household and corporate debt. Latest data by the BOK showed credit owed by households rose 10.4% this year as of end September compared to last year, much higher than the 6.5% last year and 5.7% in 2013. Along with households, Korean businesses are also struggling, largely due to weak exports. Sales at Korean firms fell 1.6% in the third quarter from a year earlier, after slipping 4.3% in the second quarter, according to the central bank. Despite the deteriorating ability of households and businesses to repay debt, the BOK says the government must be careful not to implement hasty control measures, as this intervention could drag down overall growth and consumption. Then what options are left for Korea to get its debt levels under control and enhance the country's financial stability?
And to tell us more about this, Professor Kim Seong from Ewha Women's University joins us in the studio today. So good to see you, Professor.
Good afternoon.
All right, so the report card wasn't so good this time compared to half a year ago, mostly because of growing household debt and corporate debt, right? So generally, we want to know what kind of impact does such a massive amount of debt have on a country's economy?
Well, the implication of Bank of Korea's financial stability report is simple. So there will be no further economic growth without appropriate management of the debt. In the past, we have quite a robust economic growth thanks to borrowing money from banks. But this is something very widespread phenomenon between Asian countries of China, Japan, and Korea. But we can't borrow money from banks forever because we will be more exposed to systematic problem or risk in the market. So that problem in Korea will hurt economic growth potential in the future.
All right, then I guess at this point we all agree that one of the biggest problems hurting the financial sector is the ballooning household debt.
Right.
How serious is the situation?
Well, the size of the household debt is fine, which amounts to 1,100 trillion Korean won, or 80% of the total GDP of the nation.
Wow.
But the problem comes with the speed of the household debt increase, which is twice higher than that of the disposable income of the households. So that is pretty much related to systematic problems of the Korean household. They started borrowing more money to buy houses in terms of the mortgage loans. And recently, they started borrowing more money from banks to start their small businesses, like coffee shops or fried chicken restaurants.
All right, well, like we saw in the report, sales for Korean businesses weren't so great either. And not surprisingly, debt repayment has been quite poor.
Right. So the corporate sector's financial soundness has been worsened quite a bit. That is related to increasing debt of the corporations and at the same time decreased capacities in paying back debts. So that is the reasons for a worsened situation of the corporate debts.
All right, then what about zombie companies or companies that don't earn enough profits to pay back their debt? I mean, this has been plaguing, this zombie company problem has been plaguing Korea's corporate landscape for a while now, and the government has been pretty vocal about tackling this problem, right?
Right. The increasing number of the zombie companies quickly became a serious problem in Korean economy. But the direction of policy about the zombie companies is not clearly decided yet, because if we clear away zombie companies, there will be decreases in the employment at the same time, decreases of the income. So that comes with the political and social problems together.
All right, then amid all this, the U.S. hiked its rates last week. And of course, the BOK said that it doesn't really plan to hike Korea's rates anytime soon. But then if it does decide to do so in the coming new year, then it's going to definitely have a big impact on the Korean economy.
Yes, of course. But in economics, we compare interest rate to human body temperature.
Okay.
So for example, human body temperature increases by 1 or 2 degrees, people will die in the end. Likewise, when interest rate will be increased 1 or 2%, tens of thousands of companies under marginal situation will be wiped out from the economy. So Bank of Korea is reiterating that they are not going to quickly increase the interest rate, but increasing interest rate is not avoidable because of the market pressure. So we can expect that by the end of the next year, 2016, there will be increases of the interest rate in Korea.
All right, and then like you said earlier, another problem is that we're seeing household debt growing at a far faster rate than the disposable income. Now, we're wondering at this point, in order for people or households to pay back their debt, they're going to end up cutting their spending. Now, I feel like this is going to create a new set of issues and problems now.
Right. The consumption expenditure is the largest part of the total GDP expenditure, over 35% in Korea. So if consumers begins to decrease their consumption expenditure thanks to the increase on the debt, that will give such a huge negative impact on Korean economy. But we have to pay more attention to old consumers in their 50s and 60s behaviors. When they start to pay back or deleverage their debt by selling their houses, that will decrease housing prices, at the same time decrease consumption in the larger scale. That's going to be a bigger concern in the future.
Then, in your opinion, what should Korea do in order to, I guess, cut down its debt, but then still maintain its economic stability?
Well, today's financial market instability is a perfect reflection of the corporate sector and household sector. So we have to go through something renovations or improvements of the industries and household debt. Without that, we can improve the financial stability in Korean financial market.
Let's hope to see more movements in that direction from here on out.
Right, of course.
Thank you so much for coming in today.
Thank you very much.
And that wraps it up for today. Thank you for watching, and make sure to tune back tomorrow at the same time, same place for your Business Daily. Have a great day, everyone.